Folks, you better buckle up. In today's video, we are going to break down the top 5 artificial intelligence stocks to buy right now. All of the stocks on this lovely list are attached to high growth, high relevancy, and high opportunity businesses. I will go through each of them and discuss in depth what they are, why they make sense to buy, and I'll explain the overall trajectory that they're on. And as always, if you're the one taking the risk, you got to be the one doing the ultimate frisk. Make sure to do your own due diligence on all stocks and ideas presented here on the channel so that you can come to your own conclusions. And quick plug, if you are broker curious and want to try out an excellent trading platform, well, today's partner Moomoo just started offering an extremely generous 1.5% cash rewards match on total assets, including cash and shares transferred onto their platform, or you can choose to have 10 free fractional shares of Magnificent 7 stocks. An excellent incentive to try out a great platform, and this is indeed for a limited time. Give them a look with that first link down below. Okay, let's get to work. Timestamps down below. So for much of the year, we've been in a pretty insane, unprecedented bull market for anything AI related and really anything overall. Nvidia, for example, added $1 trillion in market cap in a very short time frame, and many other companies added hundreds of billions. Billionistas. However, right now we are in a testing ground, a crucial McCruchy testing ground. We are in an area in the market cycle where markets are cooling down, froth is defrothing, people are asking questions, and fear is ticking up quite a bit. You have on one hand geopolitical concerns, on the other hand inflation concerns, and then you have on a left foot the uncertainty about this coming earnings season. And when you have all that combined with a market that had an extremely hot run from basically late October, well, it allows room for selling off and selling off quite a bit. And this is indeed the biggest sell-off we've seen in the broader market since this leg of the bull run started at the end of October. Now, as market participants, it's our job to judge a dip for what it is, an opportunity to buy stocks at better deals, but also a reminder to check the trend and prepare for the worst outcome by employing strategic risk management. Remember, it's our job as traders to acknowledge that a trend can drop a lot without changing. If it drops 10%, then you're in a confirmation of a downtrend. If it drops only about 5%, which is where we're hanging around right now, that just means that you need to be suspicious of a downtrend. And when you're in a suspicious dip, that means that you have to double down on, of course, again, risk management, but also you got to double down on employing capital only into stocks that make sense fundamentally. You buy the dip strategically, slowly, and only in stocks that make sense fundamentally and are actually relevant. Now, the stocks that I've picked for today's video are all in a nice dip cycle and have strong fundamentals behind them and fit this criteria. And in my view, all are solid dip buys right now, regardless if the broader trend in the markets continue to sell off or not. So with that being said, let's go ahead and get to work. We'll start with number 5, AMD, Advanced Micro Devices. Okay, so AMD right now is in a big dipperoo cycle, and that means the light for accumulating good deals is starting to flash. AMD is the runner-up in the chip race with Nvidia, specifically GPUs. Everyone and their mother is trying to offer the best GPUs right now because GPUs are needed for the advanced AI tools that are coming out. And Nvidia has the best GPUs in the world right now, but they are very expensive and can have pretty damn long wait times, whereas AMD is arguably the second best in the world, but they are cheaper and much faster to get. On top of that, AMD, which has been historically more focused on CPUs and then a mix of GPUs, is now investing a lot more of their resources and focus on GPUs solely, which means they are bridging the gap between themselves and Nvidia very, very, very quickly. AMD's earnings are coming out on April 30th, and I expect good numbers. Q1 was insanely hot for AI adoption, and thus chip demand should follow. And I believe AI's market growth trend is going to continue to be a long-term tailwind for the A, the M, and the D, which means now, folks, that the stock is down so much, it's a great time to look at it. AMD is now down about 25% plus from highs, which is like going to the store and getting a 25% off deal, a product you've wanted for a while. Like, sure, you could come back in a few weeks and see better deals, but you could also come back and see the price back up to full levels. And if it's down, I mean, you could always buy more. So overall, if you have a good stock, a good asset that you want, and it's dipped, you should pay attention to it. Okay, next, number 4, CXM, Sprinklr Inc. Sprinklr Inc. is a strategic AI play. It's a comprehensive customer experience management software provider based in New York City, designed to help enterprises manage and improve customer interactions across all digital channels using AI. The platform offers a variety of tools for social media engagement, customer care, marketing, and direct sales support. These include content scheduling, social social listening, engagement tools, digital advertising, and customer support functionality. Sprinklr makes use of advanced AI to automate and personalize interactions, ensuring businesses can efficiently scale their outreach and support efforts. By centralizing customer experience data, Sprinklr allows businesses to gain real-time insights into customer needs, preferences, and behavior, thereby facilitating more informed decision-making and strategic planning. That said, CXM, from a chart standpoint, has been nothing short of a disaster. It's had huge fakeouts and dump cycles, and now we are getting close to year-to-date lows at $10.93, which, if history repeats, this is a good buy zone. You look at their earnings calls, analysts have a habit of underestimating Sprinklr by quite a lot. In January, they beat EPS estimates by 37%, October 60%, July 76%, and April 436%. And they seem to always beat by around a few percent on revenue as well. You look at their year-over-year numbers, revenue is up 17%, net income up 3,269%, net profit margin up 2,822%, operating income up 1,115%, net change in cash is down as they deployed more cash year over year. But overall, I mean, the numbers paint a picture of a successful business model receiving virtually no love from markets and heading for a historically good deal entry price at year-to-date support. Next, number 3, UiPath, ticker symbol PATH. UiPath is a global software company that develops a platform for robotic process automation. Essentially, UiPath enables businesses to automate routine and mundane tasks with the help of software robots, thereby increasing efficiency, reducing errors, and cutting down on operational costs. UiPath is particularly influential in industries such as banking, finance, insurance, healthcare, and telecoms, where large-scale data processing and workflow management are critical. The company's tools are pivotal for organizations looking to embark on digital transformation strategies, enhancing not just productivity, but also providing insights into process improvement through analytics and AI capability. Okay, fantastic. Now, that being said, they call me Cheap Charlie for a reason. I always make the girl pay for the first date, and I also don't like overpaying for stocks. Okay, the first one I'm joking about. But when it comes to stocks you're buying on a fundamental basis, you want to make sure you are getting a good historical deal. Momentum trading can be great, but if you're buying the dip, you want to know you're buying something with a real business and real value behind it. And right now, the price to sales ratio on UiPath is the lowest it's been all year. And with many other software stocks that are similar, trading for 15, 20, 25 times sales, this is a much better deal, not just based on where it's traded historically, but again, also compared to its competitors. This is another example of a stock that routinely destroys analysts on earnings per share, and at the same time has seen hyperbolic growth year over year. As of Q4's report, they were already seeing the scale in of profit margin and real net income. Profit margin up 193%, net income up 222%. Of course, software companies go through this long process where they have to spend a ton of money to make the software and acquire clients, and then they start getting huge sales, but not yet at break even, and then eventually you start seeing the company focus on profitability, and boom, they start really bringing in the moolah. And right now you can see that profit margins start really increasing. I'm looking forward to seeing UiPath's next earnings report, which will include Q1, which again was a hotter quarter for AI. Next, number 2, TSM. So TSM is Taiwan Semiconductor Manufacturing Company Limited. It's the most well-known Taiwanese multinational semiconductor contract manufacturing and design company. In fact, companies like Apple, Nvidia, AMD, and more use TSM in their supply chain to manufacture their chips. And it's also down a bit from all-time highs, making it a dipperoo to buy up. And the reason that I would take a look at TSM right now and consider dip buy entries is because this is essentially the factory behind the whole AI boom. Powerful AI applications, of course, need powerful chips to operate on, and powerful chips need a factory to create them. TSM is the main one. Now, finally, number 1, PLTR Palantir, the tier of the Palin. Palantir Technologies is a cutting-edge software company that specializes in big data analytics. And throughout history, there have been a small number of stocks that were fairly easy to predict would eventually become mega caps. Well, Palantir, in my view, holds many of the criteria of a future mega cap. And not only that, but Palantir is on a nice dipperoo from recent highs at $27.50. But what exactly is Palantir for the unacquainted? Well, founded in 2003, the tier of the Palin initially aimed to support the U.S. intelligence community for counter-terrorism operations. Over time, its focus has expanded to serve a wide range of government and commercial clients across various industries. The company's software platforms are designed to integrate, manage, and secure vast amounts of data, while its powerful analytics tools from public sector agencies to private enterprises make informed decisions based on comprehensive data analysis. The company offers 3 main products: Palantir Gotham, Palantir Foundry, and Palantir Apollo. Palantir Gotham is used primarily by government institutions such as defense and intelligence agencies to organize and analyze large data sets for national security purposes. businesses. You have Palantir Foundry, which focuses more on commercial entities, including those in finance, healthcare, and manufacturing. And overall, Palantir's suite of software solutions empowers organizations to process and analyze big data effectively, supporting everything from strategic decision-making to operational improvements and security measures, ultimately enhancing efficiency and effectiveness across numerous sectors. Now, here's the thing with Palantir. You may not fully understand the programming and technology behind their platform, but you can look at their business numbers to see the proof of concept. As of the last report, some of the highlights: their U.S. commercial revenue grew 70% year over year. Their U.S. commercial customer count grew 55% year over year. They had their fourth consecutive quarter of GAAP operating profitability, their fifth consecutive quarter of GAAP profitability overall. Meanwhile, customer count increased by some 35%. They've 13x their U.S. commercial customer count in the last 3 years. So big picture, Palantir is a stock that you don't want to miss. Anyways, folks, that caps off today's video. Let us know your favorite plays down below. Make sure to take advantage of that Moomoo promotion in the description, and we'll see you in the next video.